Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. All right, congrats gold bulls and minor bulls checking back in here, starting with the dollar on the hourly, and it ended up being a bear flag where we had a little short-term bounce attempt leading to further downside after a dump. So a pretty nice looking bear flag on the hourly. This support line that ended up breaking was this low of consolidation previously. That was down at 126 and 126. So nice level for that to be at the same point, because it was very clear when we broke the bear flag that we also broke that level and hit a lower low. So the bears are clearly in full control of the dollar on the shorter term time frames, and now when we zoom out and check it out on the daily time frame, you can see that lower low rejecting from the 10-day moving average resistance. No bullish reversal candlesticks confirmed since the high was hit. Red Marubozu candlestick, meaning the bears controlled the entirety of the day. We're closing at the low, having momentum favor the bears. This is a pretty important level coming up here of 99.43. That's where our next support line is. That's the consolidation low before we got another move to the upside. And if we break that level, we're looking down at 99 even, previous resistance, and then down to 95.89. And this would be a clear break of that higher low pattern. You zoom out and you see over the past, 7 months, very clear higher lows on the daily and close to breaking. So definitely keeping a close eye on this 99.43 level. We are not oversold on the daily time frame. Checking out the weekly time frame, bears very much in control the past couple of weeks. Bearish MACD cross, RSI nowhere near oversold there. And let's check the 4-hour RSI, yet to be oversold as well. So bears in full control. Could get a little oversold bounce overnight because the hourly RSI is right around that 30 level, but we would have to see a break. Now I'm going to be watching for resistance. The high of this attempt to bounce that ended up being a bear flag, that's 163. So keeping a close eye on that level as the next resistance. If the bulls were to get over that level, they would prove something to us, but until then, it's just another lower high. So gold looking really good, and again, this all stems, in my opinion, from some weakness in the S&P 500. We saw that weakness in futures overnight when gold began trading Sunday night, and gold saw some really nice upside while the market was weak, and SPY was weak today, down 0.5% at some points. So look at this break of the downtrend resistance line Sunday night. Look at the back test and hold of this previous resistance, now as support and then continuation. And now we have another perfect rejection. I haven't touched this resistance line. It's been in these videos for quite a couple days now, or maybe even a couple weeks. But we'll look at that on the daily time frame where this resistance is coming from. But the bulls are without a doubt in control, maintaining higher lows and maintaining the uptrend. So let's look at this daily time frame. This resistance is coming from these little bear flag bounce attempts when the dump was in full swing. And that little bounce attempt high was 1220.90, and we just hit 1219.99. So right around that resistance level and rejecting, and we have another resistance level after that, another little bounce attempt up at 1232.92. So from here, Our guide to going bullish was getting the 10-day moving average as support after rejection after rejection. So that 10-day moving average doesn't mean a lot to me normally. Definitely pay attention to it. But once I saw the price rejecting from it a half dozen plus times, then I knew to pay attention once it got that level as support. So now that we have just screwed up that line, I'll fix that. But now that we have back tested and tested the 10-day moving average support and held it twice at the low of the day, Thursday and Friday, that's giving the same opposite scenario. So now we watch the 10-day moving average as support, and that we're going to take that as a signal when we close below it and lose that level. But as of right now, bulls are holding it really well. So again, if we had fallen right through and lost that 10-day moving average support initially without testing it a couple times, I wouldn't put as much weight into this moving average support as I would now that we have proven that this is a key level to be watching with the low of the day bouncing off of it a couple times. Getting rid of this downtrend resistance line now that the bulls have broken it. Nice follow through to the upside. This is a nice power hammer after one day of consolidation, bulls buying the dip and following through to the upside. So again, as long as SPY in the market is staying weak, we're anticipating gold to remain strong here. Keep an eye on that correlation. You want to be watching the dollar, the S&P 500, gold, and the individual miners. Speaking of those miners, could not have asked for a better start of the week. Need to zoom in the weekly chart here, but really strong for the bulls, and there was really no doubt that they were in control of the vast majority of the day. Finally, GDX getting over that 100-day moving average on increasing bull volume. So we were watching the tightening range where the exponential moving average support was holding the price test after test and getting tighter and tighter with that resistance being unable to get over it. 3 rejections from resistance, 4 bounces off support, volume decreasing as the range tightens, and there's your volume spike and your clear break and your close at the high of the day showing really nice strength. So the next resistance I'm looking at would be the high of November 10th, 24.27, and then 24.88, the 200-day moving average. Weekly time frame, nice follow through, continuing higher lows and higher highs, and we're looking at the 50-week resistance of 24.04. So there's a couple resistances in the $24 range, bullish MACD cross following through, and bulls looking great. Now we have this 100-day moving average as support on consolidation to be keeping an eye on. And just like I just pointed out with gold and the 10-day moving average, we now know to pay attention to GDX losing, if we lose it, the 8-period exponential moving average support. That will be a signal that perhaps this move is done, perhaps some longer-term consolidation is coming. But as of right now, that is not a risk, and the bulls are looking for some further upside tomorrow. Let's see how GDXJ is comparing. Still not over that 200-day moving average and struggling to break higher highs. We had that level of 38.08 last week. We got up to 37.99, so couldn't break that level. And you compare it to GDX blowing right through resistance. Clearly GDX a much stronger bull today. Look at the volume. We didn't see the volume spike that GDX saw. We did close at the high of the day. The bulls are still in control, no doubt, but we have the 200-day moving average resistance of 38.17 to get over, and we haven't broken the high of last week. So same scenario with the 8-period exponential moving average support holding 4 tests. We're coming up on resistance, 38.17, and we need to see a break of 38.08 to be looking for continuation. So if I were a bull, I would want to be in GDX. Either way, you're making money, but one is making more money than the other. So that's what we're looking at heading into tomorrow. And again, we'll watch for a short-term bounce on the dollar, and we just want to see another lower high, ideally rejecting from $100 psychological resistance. And the gold bulls looking really good, but they want to break above that hourly resistance, which is the line I moved by accident, just above 12.20. So really nice start to the week, and we can draw an even stronger uptrend support line to just keep an eye on the trend and see if the bulls maintain strong. I would make sure no hourly candlesticks are closing below that level. And we'll see if we get that follow through tomorrow. Again, ideal scenario for these gold bulls, in my opinion, would be for the S&P 500 to lose that middle Bollinger Band on SPY. And again, check out the video. I do videos on those every night, SPY and the S&P 500. And we keep holding that middle Bollinger Band. The bulls keep buying the dip. If one of these days the bulls do not buy that dip, we lose that middle Bollinger Band and close weak, gold bulls should really respond. So thanks for watching. We'll check back in tomorrow. See you then.